Hi everyone and welcome to Wall Street Multimedia's Market Watch. I'm Tiffany Lu, bringing you the latest market news. Apple made headlines on Tuesday, losing more than $100 billion in value by the day's close, despite beating expectations on revenue and income. The market finished lower on word from a Fed president who said a rate hike this year is likely. U.S. stocks traded choppy on Wednesday before closing mostly higher after energy shares and Disney's revenue disappointed investors. Earlier in the day, stocks traded higher on soft ADP data that suggested the Fed would hold off on raising interest rates. On Thursday, stocks traded near session lows in late morning trade under pressure from energy and consumer sectors. The Dow fell over 140 points by noon. The media slump continues with Fox, CBS, Viacom, Time Warner, and Disney having lost $48 billion collectively in value in just 2 days. Now let's turn to Matthew Cheslock, who will give us his commentary on how tech and the Fed are influencing the U.S. market. So we've seen lately that tech stocks, particularly Apple, seem to have an enormous sway on markets. In light of Apple's recent price volatility, how can we expect the U.S. market to perform in the near future? And will it continue to be tied to the performance of certain companies?
Well, you saw Apple yesterday. It was a dramatic swing. In the pre-market, it was down, and then it rallied, kind of took the market with it. And it is funny. I mean, Apple, as far as market cap goes, is the largest market cap stock out there. So it will move markets. Disney was another one yesterday. It took about 70 points off the Dow. So these major companies are moving the markets, and they will continue to do so, especially late in the summer after earnings.
Many are concerned that 2015 is starting to look like the dot-com bubble of 1999, and they're advising caution. Do you have the same concern?
I think you always have to be concerned after a bull market that we've seen over the last 6-7 years. So it's been a pretty impressive run. And if you're not nimble right now and you're not thinking about preserving some of your capital, then you may miss the boat. We've bought these dips so often, and today we're seeing a market that's right on the 200-day moving average again. Will it be bought? I'm not so sure. We're not going to see any action out of the Fed till at least September, and the jobs number that we expect to see Friday really won't have an impact on this market.
Has the U.S. market already priced in expectations of a Fed rate normalization, given the fact that it's been the topic of discussion for so long?
It definitely has. It's just a matter of time. It's not a matter of if. So, I think we're going to look more towards September's numbers. We're going to discount probably what we've seen this summer, and that's going to make an impact on what we do. Also, foreign markets are starting to come into some clarity now with what Greece reopened the other day, and China's kind of stabilized here a little bit. So these numbers will all come into play in what the Fed does, and probably be October.
That's it for this episode. I'm Tiffany Lu, and thanks for watching Market Watch. I'll see you again next time.